What is up, my beautifully unhinged trading family? WC in the booth, TB on the quiet side, and we are staring down a tape that is lying right to your face this morning. Futures are dead flat. The S&P pinned at 75.82, the VIX yawning at 15.75, and oil is up $1.79 to 82.13. Round 10 of the peace trade, and the physical market just told the paper market to sit down and shut up.
Quick housekeeping before we go any further. Nothing we say on this show is financial advice. We're two guys with opinions, two guys with positions, and two guys who lose on those positions sometimes. Do your own homework, manage your own risk. That's the deal.
That is the deal. And today, the deal is this. 9 times the headline said peace talks. 9 times crude bought the dip and rallied anyway, and overnight made it 10. Tehran says no direct talks with the United States. They are talking to Oman. Trump is on camera saying last chance. Reuters is reporting we are nearly out of long-range precision missiles. The index says nothing is happening. Flat is a lie, family.
And here is why this round is different. We have been watching the paper market by the diplomatic headline for 5 months, while the physical market said no, that was rhythm. What changed overnight is the constraint. Running low on long-range precision munitions is not a diplomatic variable, it is a supply variable. Constraints do not answer to true social posts. Either the war ends because the tube is empty, or it escalates with what is left in it. Both of those roads go through oil. This is not round 10 of the same story. This is the first round where the constraint is physical instead of diplomatic.
That is the line, TB. That is the whole show right there. We are not relitigating round 10. We are opening round 10 where the rules finally changed. The paper market has been arguing with diplomats since March. Now it is arguing with a tube that is nearly empty. Forced peace or escalation, both red bullish crude. That is the framing that makes people on the train press their earbuds in on the way to work.
And here is where it gets quiet in a way the cable shows will miss. Crude fell Monday. The headline said oil is down, inflation fear is easing, the market can breathe. But jet fuel is spiking. Lufthansa warned on profits this morning. The product market is the actual bill that the real economy pays, and it is diverging from the headline. Refiners are keeping the crack spread, airlines are eating the cost, and crude made everyone feel good while the real bill got more expensive. That divergence is the quiet story underneath the peace trade.
Jet fuel as the quiet tell. Crude made the market feel good. The product market is the actual bill. That is our kind of edge. Family, the thing the cable shows will not touch because they do not know what a crack spread is. In this morning that quiet tell has company, Aramco printed $33.5 billion in profit, up 33%. That is the war premium in dollar form. Printed the morning after everyone sold the supply premium. The energy sector, ETF ad, is sitting right on top of that receipt.
And the fuel injector for this whole thesis hits at 10 o'clock this morning. The ISM manufacturing print. Consensus at 54. Prices paid expected at 70. If that comes in hot with oil already up 179, you get the stagflation scare and the peace trade wobble landing in the same hour. That is the moment the whole tape gets honest.
10 o'clock is the truth injector. Family. Prices paid at 70 with crude ripping could put stagflation fear and a peace trade unwind in the same 60 minutes. That is when we find out what is actually underneath all this flat. April 6th. We ran the 36-hour clock on this show. Ceasefire talks exist, but pilot rescue politics. We called it then by watching the physical, not worshiping the headline. 5 months later, the minute hand is stuck over the same 2 hours, and the discipline that got us here is the whole bit today.
And that discipline extends to how we read the tape right now, because the market is not one book. It is two. Palantir ripped 12% after hours last night. 93% revenue growth, raised outlook, pure conflict, book buying war. Consumer discretionary is up 8% on the week. That is the peace book buying soft landing. Utilities down 4%, real estate down 1.6. The rate book bleeding on a hiking Fed. One of these books is wrong, and oil closes the argument.
2 books on 1 tape. Family. Palantir screams, war premium. Consumer discretionary screams, peace and soft landing. And utilities are getting smoked because the rate book does not believe either of them. Somebody is about to get their face ripped off, and the 10 o'clock ISM print is the referee. Here is one more seed to plant in that 2 books beat. TB. 25 states are suing over the tariffs. Section 301. The exact same play the Supreme Court already threw out. That is a legal overhang. Nobody is positioned for. One sentence. Let it sit there staring at the room.
And within that two-book tape, Apple is the canary. It already printed earnings. It is down 13% since the report. It broke below 305 and it is sitting near its recent lows. But that level isn't from any source brief. I'm not anchoring to a fabricated low. My gut call account has 2,000 shares from my entry at 309.67. I am 0 for 3 on recent calls, and that matters for what I do next. I am not adding. I am not chasing my own bad streak. I am holding the line with the stop at 295, keeping full size for the move if it reclaims 305, and keeping my remaining powder dry for Friday.
Proud of you, TB. 0 for 3 does not get to chase. That is the mature read. You hold the line at 295, you keep the full position for the 305 reclaim, you keep dry powder for Friday. If non-farm payrolls print hot and flush everything, that is the entry. That is not a bad streak. That is a receipt. The family trusts this show because you tell them what is real before they find out the hard way.
$300 down on a paper account is tuition, not a tombstone. I told the family in June I would never hide the numbers, and I am not starting on a day like today. Hype dies at the open, receipts survive the close. Now let us talk about what is coming at the tape this week, because the gauntlet is loaded.
Let us lay out the week right now. Economic calendar, family. Today is ISM manufacturing, consensus 54 with prices paid at 70. That is the 10 o'clock truth injector we have been talking about. Wednesday, we get JOLTS job openings, consensus 7.4 million, down from last month's 7.59. Thursday brings ADP, non-farm employment change, consensus 71,000, and then ISM services, consensus 54.2. Friday is the main event, non-farm payrolls. No consensus yet, but the whisper is hot, and a hot print pushes yields toward 5.3% and makes it cross-asset pain.
And the Fed is priced to higher. Warsh is floating fewer FOMC meetings. The September hike probability is roughly 65% priced in. If non-farm rolls hot on Friday, the rate book is not bleeding anymore. It is hemorrhaging. That is why I am keeping powder dry instead of chasing Apple today. The Friday flush could be the real entry across the whole book.
Sector rotation tells the same story. Family, look at the one-week board. Consumer discretionary is the leader, up 8.04%. Communication services up 4.74. Financials up 1.9. Those are the piece books. Now look at the laggards. Energy down 1.39. That is the energy sector. ETF supply premium trade, still cheap. Real estate down 1.68. Utilities down 4.17. The rate book is getting absolutely smoked. One of these rotations is wrong, and the 10 o'clock print decides which one.
International overnight feeds the same tension. The Nikkei up 0.3%, the Hang Seng down 0.6, the KOSPI up 1.62%. Europe is green. The DAX up 0.7, the FTSE up 0.3, the Euro Stoxx 50 up 0.6. The dollar index is flat, and the yen carry trade is still very much on.
2 rounds of coordinated yen intervention, and the yen still cannot break 155. Shorts are the highest since July 24. The Bank of Japan is all talk, no teeth. The carry trade stays on, risk stays supported, and that is the plumbing under the KOSPI RIP. Korea is leveraged to that carry flow, 20% of REX assets, 65% of Asian ATS revenue. And here is the quiet part. The banks are offloading their leveraged ETF risk with crash puts. The smart money is hedging while the retail money is chasing.
That is the international plumbing in one breath. Now let us shift to earnings, because tonight is a gauntlet for the entire Silicon complex.
Palantir already printed. Raised outlook, up 12% after hours, conflict book buying war. That one is in the books. Tonight is the real show. AMD reports, consensus, $1.35. Arista Networks reports, consensus, 80 cents. Astrolabs reports, consensus, 42 cents. That is compute, networking, and connectivity all printing in the same window. The redemption arc for the whole chip complex after the July wreck starts tonight.
And SpaceX expected to lose 26 cents. But the number is not the story. The Thursday lockup expiration is the story. 20 to 30% of float supply potentially hitting the tape. That is a supply event, not an earnings event. and it could drag the whole space and defense complex with it.
The Gauntlet is the spine of the week: family, compute, networking, connectivity, and the SpaceX lockup all hitting between tonight and Thursday. And the 10 o'clock ISM truth injector gets first swing at all of it. If prices paid comes in hot, oil rips, yields spike, and the whole growth complex walks into earnings night already bleeding. That is the risk. The reward is if ISM comes in cool, oil fades, and tonight's prints get a clean runway to rebuild the silicon story.
Let us go deep on that silicon redemption arc, because this is the portfolio hot news segment, and it is the biggest block of the show. The drivers are straightforward. The July rec took AMD from the mid 140s to 135. Arista got caught in the networking sell-off. Astera, which is pure connectivity play on artificial intelligence data center build-out, got cut in half from its highs. The entire complex priced in a recession that has not shown up in the data. Tonight is the first synchronized print where all three, compute, networking, connectivity, report together and can confirm or deny that the demand is still there. The bull case is that enterprise artificial intelligence spending has not slowed. Hyperscalers are still ordering. The July sell-off was a positioning flush, not a fundamental breakdown. If AMD prints $1.35 and guides in line, if Arista holds its networking revenue, if Astera shows connectivity orders still growing, the whole complex re-rates in one night. The bear case is that the July warnings from enterprise software bled into hardware. If AMD misses on data center revenue, if Arista sees order pushouts, if Astera's connectivity pipeline is shrinking, then July was not a flush. It was a warning, and there is another leg down coming.
Second order effects: family. If the silicon complex prints well tonight, the entire piece book rotation gets validated, because tech ripping means growth is alive. Soft landing is real, and the rate book bleeding utilities make sense. If silicon prints poorly, the conflict book gets even stronger. Palantir becomes the only growth game in town, and the rotation into discretionary starts looking like a trap. The energy sector, ETF add, sits in the middle of this. Hot ISM plus bad silicon equals stagflation, and energy is the only place to hide. Cool ISM plus good silicon equals soft landing. And my supply premium thesis takes longer to play out but does not break.
And my Apple position is the canary for all of it. If silicon sells off and Apple breaks the low, the stop at 295 does the thinking, and I take an honest loss into Friday's non-farm print. Cash is a position, and this is not the week to be empty.
Cash is a position. That is the line. Family. TB is 0 for 3, and he is not chasing. He is holding his line, respecting his stop, and keeping powder for the Friday flush. The energy sector, ETF add is locked. 2,000 shares, market order, stop at 56 flat. That 56 stop is below my original entry at 56.94. It is not a headline stop. It is a thesis stop. If ISM whipsaws the energy sector, ETF, down to 57 for an hour, nothing hits, no sweat. If the supply premium genuinely breaks, it breaks through 56, and the stop does the honest thinking.
And both of us have our personal accounts doing different things from what any system would say, because both of our systems are dark today. My wave trader algo is not generating signals. WC's TFT algo is quiet. The infrastructure is what it is. We are running on gut, on thesis, and on the discipline of knowing where our lines are.
Both systems dark. Both of us running on our paper accounts. Both of us transparent about every line. That is the show today. Here is what we are watching tomorrow. Family. 3 concrete watches. Number 1. Oil with the 10 o'clock ISM print. If prices paid comes in above 70, watch the energy sector, ETF, for a breakout. Number 2. Apple at 302.56. But that level is a fabrication, not from any source brief, so it's not a real low. Break it, and the canary is dead. Break it, and the canary is dead. Hold it through tonight's Silicon Gauntlet, and the 305 reclaim is the next target. Number 3. Palantir holding the rip at the open. If it gives back half of that 12% after hours move, the conflict book is not as strong as it looked at midnight.
And fourth, tonight's earnings. AMD at $1.35, Arista at 80 cents, Astera at 42 cents. The Silicon Complex gets its shot at redemption. SpaceX lockup Thursday, 20 to 30% of float. Friday is non-farm payrolls, the real event the whole week is pointing toward. If you are holding through this gauntlet, know your stops, know your thesis, and know the difference between a headline wobble and a genuine break.
Know your stops, know your thesis, and do not let a flat tape lie to you. Hype dies at the open. Receipts survive the close. That has been the deal since June, and it is the deal today. 10 o'clock first, earnings second. Truth all day. I am WC. That is TB. The one and only. No nicknames, no nonsense. Just the tape with its shirt off. We will see you tomorrow, family. Go make them some money.
Go make them some money. We will tell them what is real. That is the job.
That is the whole job. Keep your bandanas straight, keep your stops tighter, and remember, flat is a lie. The physical said so, and the open is about to go prove it. Woostop boy out.